What's up YouTube, it's your boy SunnyChopper Trading, and in this video we're going to be going over a trading strategy called the moving average crossover strategy. Let's get into it. If you're new to this channel, this is where we talk about tips, tricks, and strategies to make more money in the Forex market. So if you're all about that life, hit the subscribe button and hit that notification bell so you know exactly when content drops. Alright, so the moving average crossover strategy is a beginner strategy. It is very easy to understand. And this strategy is most well suited for swing and momentum traders. If you don't know what type of trader you are, I have a video that goes over 3 types of traders, link in the description, or hit that card. Now, first I'm going to go over the theory on the computer of truth and justice, and then I will show you in action how you can use the moving crossover strategy to your advantage. Onto my computer. Alright, we are on the computer. So I'm going to talk about the theory really fast about the moving average crossover, and then I'm going to show you guys the actual application of it. A moving average crossover strategy usually has 2 or 3 or 4 even moving averages. You want to keep it at 2 though when you're a beginner. This is what's going to happen. You're going to see prices going up and down, right? Well, if you haven't seen prices going up and down, I don't even know if you're in the Forex or stock market. And then you're going to have a moving average, which is going to be the fast one. Let's just say that it's the 20-day simple moving average. You always want to use simple moving averages. You don't want to use EMAs. And you basically, it's going to show you how it lags behind the market, but it's following the market basically. It'll look something like that. And then you're going to have a slow moving average. Let's just call it the 50-day moving average in this case. This one is the 20-day simple moving average. You're going to have another moving average, and it's going to lag even harder than the 20-day moving average, but it's going to be right behind it. This is going to be the 50-day moving average, so 50-day SMA. What you're going to be doing is you're going to be finding crossovers from where the 20 crosses the 50 one, or the fast one crosses your slow one, right? In this case, right here is where the fast one goes from the bottom to the top. And when you have your fast one going from the bottom to the top, you want to buy. If your fast one goes from top to bottom, you want to sell the market. A very quick note about this. Sometimes you might have the market which is flat. There is no trend to it. And the crossovers might happen a lot. In a market like that, you don't want to be using this crossover strategy. Alright, on to the practical application now. Enough theory talk. So I have here is pulled up the AUD USD on a daily time frame. Now over here we have the 20-day moving average as a blue line, and the 50-day moving average as the red line. As you can see, right here, we have a crossover. So right here, we have the crossover happening. And you would have sold right here. Over time, I'm not talking about right away. The moving average crossover strategy works over time, so just be careful about that. You would sell up here, and then you would still be holding the market right now. You'd be holding the sell trade right here. And basically, you're going to be going with the trend. You can see that the fast one goes from bottom to top over here. You would have bought right here, and you would have sold right there. So you would have made some profit. Now you can use more advanced strategies to get better entries and better exits. But that is the basic premise of the moving day crossover strategy. Now you want to be using this crossover strategy on a larger time frame. So anything from a daily to the weekly to the monthly is a good time frame. Anything below that, you start getting too much noise and you might not get good entries. What do I recommend? I recommend using this strategy when you're a beginner. When you're a beginner, this will be very easy to understand, and you'll basically get a good grip on the markets and maybe even make a little bit of profit, right? Here's also what I recommend. I recommend using this strategy in conjunction with something else. You always want to be using the moving day crossover strategy in conjunction with something else, because here's the thing. If you wait for the market, the signal to get out of the trade, sometimes the market has already moved against you enough where your profits might not be that big anymore. For example, let me put a horizontal line where you would have gotten out of the market right there, and this is where you would have gotten into the market. As you can see, you had all this potential to make money and you had a lot of profit, but in the end, when you had the signal come to you, you didn't take as much profit as you should have. Maybe not even a third of it. It looks like a fifth of how much profit you should have taken. So you want to be using the moving day crossover strategy in conjunction with something else, because it's going to help you get better entries and better exits. Now, if you enjoyed that video and you understand the moving day crossover strategy a bit better now, why not hit the subscribe button and hit that like button as well? I want to hear from you guys. What's your opinion about the moving day crossover strategy? Are you going to use it? Have you ever used it? Have you made money with it? I want to hear your guys' opinions. Put them down in the comment section below. And as always, this is SunnyChopper Trading. Peace.